morning, everybody. It's April 1st, 2022. My name's pianomattyb. That's Scaramucci's. This is your morning TA. A brief glimpse to the crypto markets, where the sun's shining, where the wind's blowing. All the humble opinion of this piano. Zamboni will bring in the data. The FOMO index has continued down to 50 from yesterday's 52. Bitcoin dominance is 41.3%. 24-hour volume is 141 billion. And the overall market cap is 2.08 trillion. Give or take 100 million. Whoa, E dominant 7th, flat 10, augmented 5th. That's a handful. So's this chord. She decided to leave home at 17, move to the Big Apple to become an actress, obviously. And although she had some success in off-Broadway theater troupe productions, ultimately, she decided that the scene was just not for her. Luckily, she met C. Major, the hedge fund manager. Now she tends to her garden in her palatial cabin in the Hamptons with her 3 kids and her 2 labradoodles. Well, we talked about this, so it should come as no surprise. We've been droning on and on about bearish divergence and this 45.5 level ad nauseum all week, basically. A tree that's about to timber under its own gravitational pull. If she's so darn tootin', we could see a bounce at the 38% fib level of 45.5. Double banger of negative divergence. Both the MACD and the RSI are a smidge overbought. If we break that, we'll likely see support at 45.5. And this is traditionally where traders will put in shorts to catch the dips. Alas, too many shorts, just the right time can dump the price. One more? We're still hearing the echoes of some ghoulish bearish divergence rattling in the hall. And yeah, there's some bearish divergence as price action made a higher high while the RSI made a lower high. And if that glitch in the matrix plays out, we may see that at 45.5. Now we may have got a little more bearish bad breath than we bargained for as price action closed this candle at 45.5, then continued down all the way to 44.1 before we saw a bounce. We're currently in the midst of carving out a hammer candle, which is a bullish continuation candle. However, if we close this green, we'll be leaving a nice healthy wick for the children of Enchanted Wicks Choir to gospel about. And of course, we may candlestick that wick back down at 44.1. And a last point of interest on that downside is rounding the bottom at 43.5 and 42.5 before returning back up. Now, although it's not fun watching a dump take place, it does tend to feel like the sky is falling. These are healthy and part of every bull run, and they need to take place, especially after an 8-day run of green candles. It's like watching your kid wipe out on his bike. You know it's inevitable that it happens. It hurts you to watch it, but it makes him a better rider in the long run and also builds a history of recovery from which we can stop worrying when we see it again. 'Cause we'll see it again. That's just how she rolls. Don't forget to like if you dig, my friends. Gauges on the daily seem normal with no divergent glitches in the matrix. However, on the 4-hour noisy little so-and-so, the bearish divergence, well, she's reset into hidden bullish divergence. And although it doesn't tell us of an incoming reversal, it does point to some bulls coming into the market and helping us out with support. I'm cautiously optimistic that we can get back up and over the 50 At the 45.7 level, start heading up to the 20 moving average at 46.7. If you dig it, then click it. The subscribe button, that is. Just for a little perspective, we're still higher than we were last Friday, where we opened the day at 43.5. And while she might not be something, she sure ain't nothing. And remember, folks, we're playing the same game as our psychopathic elected leads. That's right, it's the long game. So zoom out and have a fantastic day. And it's Friday, so join me tonight at 9:30 for the live dueling pianos. If you have any requests, put them in the comment section. And of course, sing me out a 3, 4. Whoa. Cha-cha-cha-ching. Have a great weekend, everybody. Make sure you like and subscribe.